the city of Barrie actually just implemented a property tax on the garden suites. So we've got people that have built garden suites, and they retroactive the tax till when they were complete. So we've got a couple garden suites on some of my properties. So I got a tax bill for all of 2020 and 2021. So they're taxing them now. So they say they want affordable housing, but they're taxing the affordable housing. Something that you have to keep an eye on right now is concrete. Concrete has given us a huge headache. There is a shortage of lime, essentially. So if you go to the hardware store right now, you try and buy a couple bags of concrete, they're sold out everywhere. The concrete plants are capping people, like our forms, footing guys and everything, about how many they can use per day. And it's just causing us a huge headache right now. So if you guys are thinking of doing any building development in the next little while, talk to your concrete guy. Make sure you book them in 6 months in advance, 3 months in advance, because it is very difficult to get them out. So just be aware of that.
All right, guys, welcome back to the Canadian Real Estate Channel. I am your guest host, Emma Pace, and I run a real estate team out of Toronto called Monstera. But enough about me, because today it's all about the man that I've got with me, Colby Marshall, the Barrie specialist. So nice to meet you, and I'm excited to learn a little bit about Barrie, because I'm not going to lie, I'm a noob when it comes to Barrie. So before we get into your presentation, why don't you, for any viewers that don't know you, just tell us a little bit about yourself.
Sure. Yeah, I'm Colby Marshall. I'm a real estate agent in the Barrie area. We service Simcoe County. So essentially Barrie, Orillia, Innisfil, Essa Township are our primary areas. I've been in real estate for about 12 years now. I come from a developer builder background as well. So we get into quite a few different projects from a development standpoint as well. We also run a construction company as well. So we'll find properties for people, present them with the opportunities for real estate. We'll do the acquisition through the real estate side. And then we have a whole power team of individuals that will do all the project management and all the build side as well for all the properties that we acquire for you. So we sell the whole dream. We're a one-stop shop, and our clients love it.
Cool. Yeah, it sounds like a very convenient start to finish solution for your clients.
Yeah. Oh, yeah, for sure.
Awesome. All right. Well, I'm looking forward to getting into the data. Should we pull it up?
Yeah, absolutely. Let's get into it. So we got the market update for August. I know we took the summer off here, so I'm sure everyone's just scratching their head, wondering what's going on for these crazy times here with these interest rates going up and prices coming down. I'm sure people are just itching to know what's going on. So on the agenda for today, we'll have the stats for Barrie, Orillia, and Innisfil as per usual. We got Simcoe County news, what's going on in Simcoe, what's happened over the summer, catch everybody up on what's going on there. And then we do have a promotion for our upcoming in-person event. And we'll actually have our mortgage broker come and speak a couple words as well. He will be introducing himself later on in the show.
It's my first live guest, so I'm looking forward to this.
So this is the map of Simcoe County. So the areas that we primarily service are Barrie, Orillia up here, Esses down here, and Innisfil are the prime areas for investment properties in the county of Simcoe.
Cool.
So we'll start with Barrie. Barrie's the biggest center out of all of them. We'll start with the average sale price for detached homes. So the last video we did was back in April, May. We're starting to see things slow down, interest rates going up, and you can actually see how much the average sale price is coming down. So we're seeing more and more decline going into the fall here as well. So not a surprise based on the interest rates and things like that. But yeah.
So you guys were peaked around 1.1 and you're about 800, hovering around 800 now. So that's, I don't know, somewhere between 20 and 25% for price reduction, which seems fairly standard in most areas of Ontario at this point in time.
Yeah, and the beginning of this year was very strong as well. So January, February of this year, we've probably seen 10 to 15% increase.
Yeah.
So now to see a 30% decrease over the last 6 months, like for this year, we're probably only down at probably about 15% based on the first 2 months of that increase. So nothing too crazy, but I foresee things still continuing to go down in the foreseeable future, as well as if they put the interest rates up in September, which I believe they will as well, that it'll continue to decrease. But we do have some market predictions here at the end as well.
Cool.
So number of listings, of course, when prices are going down, usually the amount of inventory is starting to increase. So you can see back in December and January, that was like the peak of everything. That inventory was almost zero. You can see now climbing. The inventory is actually climbing substantially all the time. It kind of peaked inventory-wise in May, June. I think this is because there was a lot of people that tried to sell, and a lot of stuff stayed on the market trying to catch it before it dropped, and they kind of missed the boat. So this is why there was a big peak in the May, June area. And of course, that's still a little bit of the spring market too as well. And now we're seeing more normalized levels of inventory in Barrie.
Yep.
This is an interesting slide. We've had them on the last couple of months, list to sale price. So if you look back in September and earlier in this year, things were going a lot over list, and you can see that. And then January to February, you can start to see that things are starting to go the other way now. People are getting deals. You're getting conditions back in your offers. We're starting to lowball a lot of listings that are sitting. We're sensing where the motivation is and things like that. So we're starting to get some good deals. And like you said, the decrease is there, and it's continuing to come as well.
Yeah, for sure. Yeah, this is a super easy to read chart for someone who wants to get a better understanding of, people always ask us as agents, am I paying what it's listed for? Am I paying, is it going over? Is it going under? So this is a really clear cut opportunity for you to see kind of what the trends are in the market. So the blue there is the final sales price, and the original price is in the green. So if the green is lower than the blue, sellers have the advantage. And if the blue is lower than the green, then the buyers probably have the advantage.
Yeah, and you can see, if you look at the chart too, you can see exactly when the market shift too, like if in April, May, where it went from pretty well from a buyer's market to a seller's market, on this chart, it really depicts that. So
yeah, for sure.
All right, the next area is Orillia. This is our favorite spot for the garden suites. Again, prices are declining. We've seen the average sale price in Orillia up over $1 million, which is crazy. Never thought we'd see the day, but it broke $1 million. Now we're back down, around the $800,000 price point. A lot of the stuff that we're targeting in this area, we're getting between $650,000, $700,000. That for garden suitable properties, which is stuff that we are probably getting about year and a half ago. We were getting those similar sales. So we're not at pre-pandemic levels yet, but we're definitely coming down pretty quickly. So
cool.
Number of active listings. So they same kind of deal, almost no listings in December, January. And then as soon as interest rates started going up, more inventory is coming on. May and June, again, end of the spring market. And now the amount of inventory coming on is starting to slow down a little bit as well. But it'll probably pick up after the kids go back to school. You'll see more houses come on and for the fall market.
For sure.
And same as the other one, you can see the shift from list to sale price.
Wide.
Yeah. Oh, yeah. Big time. So you've seen a lot of stuff that was sitting. They're getting, we're seeing a lot of deals. There's a big spread there between the green and the blue once you get into May, June, July, August. So you see a really big decrease coming down in Orillia. And, that's great for us looking for nice properties that we can rehab for sure. So
yeah, for sure. And then guys, like if you're a viewer and you're watching this and you watch this market update on a monthly basis, if there's one slide to pay attention to, if you're like, I just need the one thing to figure out how it's going, look at this. If you see the blue and the green start to slowly get closer together and it starts to gap up, you can see the market is turned and it's starting to go the other way, right? So, So yeah, there's a quick little tip or a quick little hack to get a very quick finger on the pulse for what's happening in the market.
The next area we'll talk about is Innisfil. So same sort of trends. December, January it peaked, and then a continuous downtrend price point wise in the Innisfil area. And then the number of listings, same deal as the other two areas. Minimal inventory in December, January, and then maximum inventory at the end of the spring market when the interest rates started going up. And now we're seeing a bit of a more normalized summer. And then again, we do foresee the fall market having more inventory again once the kids go back to school, everyone gets back into their routine, which is pretty well standard every year. So this average list to sale price is a little all over the place here. So Innisfil is a bit of a weird area. There's a lot of waterfront properties and stuff like that as well. So it gets a little skewed here and there.
Yeah.
But
and it didn't look like there was like that much volume, right? So it's much
Yeah.
easier to get skewed when you don't have as many listings for sale.
Exactly. But again, you can just see, the list to sale price back earlier this year. It's definitely a seller's market, and this chart really depicts that we're definitely going into a buyer's market now. So you can see the big decline coming down in the actual sale price. So I really like this chart for helping depict those kinds of things. So
cool.
All right, prediction. So everyone keeps asking me, interest rates are going up, prices are coming down. Do I buy now? Do I buy in 6 months? What's going on? What do we do? So this is my prediction. From a macroeconomics perspective, we still have a massive shortage of supply. We still have immigration at an all-time high and probably another interest rate hike in September. So those are the three factors that I'm kind of basing on. I think that we're going to have about an 8-month window for prime time buying. I think end of this year into about the beginning of Q2 of next year is going to be where things are going to start to trough.
Yep.
And I kind of see a interest rate decrease for Q2 next year, which will probably start to put prices back up.
Yep.
So I think, November to May is going to be an 8-month window of buy time before the market starts to creep back up. I'm not saying it's going to go up 25% per year, but I think it'll start to transfer from a downward swing up to going back up. So if there's investors out there, you're looking to buy, your window is going to be pretty good here after if they raise interest rates in September.
Yeah.
It'll probably take about 30 days for that effect to actually hit the market. And then, end of October, mid-October, November, you're going to be in prime time after Christmas. February is the biggest month for power of sales.
Yep.
So in combination with everything else going on in the world right now with inflation, interest rates going up, any Q1 of next year, late this year, I would be looking to pick up if you got the cash to do it.
Yeah. I was going to say, I very much agree with you. And I think one thing that's really important for people to understand is like, we can talk about these numbers until we're blue in the face.
Mm-hmm.
But one thing that you can't necessarily quantify is the overall market sentiment, which I personally believe is the biggest driver of how things go.
Yeah.
And so it's like, if this rate hike happens and there's uncertainty, then things are slow. Once they decide that they're going to stop these rate hikes, maybe they don't lower rates and they just hold them. It provides a little bit more certainty. And as certainty comes in, as a buyer, you start to lose some of the leverage that you've gained. So maybe the days on market become shorter, and then maybe you lose a 5 or 7 day condition and it becomes a 3 or 4 day condition. And all of these things just slowly start to tighten up. So it doesn't mean that things are just hot and then cold, but you're going to lose likely some of the leverage that you've gained.
Yeah. Oh, for sure. So what are we buying? We're still buying garden suitable properties. Prices are coming down now, but at the end of the day, if you were to buy something today, you're going to have a 60 to 90 day closing on it. We've got to get all your building permits, build the building, do your conversions, everything like that. So by the time we're actually done and built, we should be getting out of this slump and things should be starting to take off. So again, that's another good reason why, in the next couple months here is a good time to buy.
Yep.
Something else that we're looking at too is just stuff with longer timings for like approvals and things like that. So this building here, it's a 12-plex. We've got a couple 6-plexes and 4-plexes that we're doing for next year. So, the approval process takes a year, 18 months, 2 years, depending on what you're doing. So if you're kind of riding the wave here, you don't want to buy in a down market, but your ARVs will be, when it's built in 2-3 years from now or a year from now. So now is the perfect time to buy, get all your paperwork done and ride the wave up. And by the time everything's done, you'll buy low and refinance high, hopefully a little bit of lower interest rates as well.
Yep.
So again, the next 6 to 8 months here are prime time for investors to get in, steal some deals and, start pushing paper. And by the time we're done building everything, then, you should be in a different market segment altogether.
I like it. So lining yourself up for success when the market swings back around.
All right, guys. So what's going on Simcoe County news-wise? We got a couple different little articles here I just want to go over real quick. So I know we keep you up to abreast of what's going on with the garden suites in Barrie. So the city of Barrie actually just implemented a property tax on the garden suites. So we've got people that have built garden suites and they retroactive the tax till when they were complete. So we've got a couple garden suites on some of my properties. So I got a tax bill for all of 2020 and 2021. So they're taxing them now. So they say they want affordable housing, but they're taxing the affordable housing, which doesn't really make sense to me. So do your due diligence, check out, what the tax is going to be on your garden suite if you're building in Barrie, just to make sure you get your numbers right. They're given separate tax bills in addition to your regular property tax as well. So
is there some kind of guideline that, are they able to find some type of tax guidance on the city website or something like that?
So I've kind of figured that what they've done is the amount, because when you apply for your building permit, they ask for the estimated cost of the building.
Yep.
So whatever you put on that, they're charging you about 1% on that. So the one that I did on one of my places was $250,000. So they're charging me $2,500 a year.
Wow.
Just for that back
garden suite.
Yeah, which is crazy. And then some of the ones that are slab on grade, they're maybe 150, 170,000. So they're getting $1,500, $1,700 a year tax bills as well.
And if we just put that into perspective, what would it cost? What would the rental income typically be for something like that? If you spent $250.
Yeah, around the 250, you're probably 3,200 plus utilities.
Right. So you lose 3/4 of 1 month for this new tax at the end of the day, approximately.
Yeah. The numbers still, look good from numbers perspective, but it's just one more thing that they're adding on now. Just they keep pushing for affordable housing, and now they're taxing it, which is just backwards. So let everybody know that. Not what everybody wants to hear, but just got to keep people abreast of what's going on.
100%.
Next thing is the GO Train expansion. So they have begun phase 1 of the GO Train expansion. So they are doing right now is we have the GO Train in Barrie. It goes right to downtown Toronto. It's not very efficient right now because they only have certain times on weekends and a couple of weekdays. I think there's 3 times in the morning and 3 times at night where you can get down to downtown Toronto and back. And if you miss those, you're kind of screwed. So this is a really big deal. They just started phase 1. They're putting in the infrastructure to widen the tracks. What they're going to do is they're actually twinning the line from Barrie to downtown Toronto. So that means there's going to be trains every 15 minutes from Barrie to downtown Toronto once they're done this expansion, which is supposed to be about 3 to 5 years from now. But they are starting now. They've shut the road down around the corner from me here, and they're starting to work on it, which is really exciting. From an investor standpoint, you want to be around major arteries for transportation. With gas prices and everything as crazy as they are, more and more people are going to not have cars. So proximity to your GO station and the frequency down in downtown Toronto is definitely going to help, with people that need rides down there. So
that's going to have a massive impact. You have to think about what our population is going to look like in 5 years from now. And we'll assume they say 3 to 5 years. By the time they finish it, it's probably going to be on the latter half of that prediction. And so if you think of, getting in ahead of the curve, I know it's tough to be able to, it's a tough pill to swallow to say, what should I do in today's market if you're very short-sighted. But if you've got a long-term plan for one of these properties and you know that this is something that's not proposed anymore, if it's a guaranteed thing, that's a pretty big needle mover for a neighborhood right there. Every 15 minutes in downtown is huge.
And it's not just Toronto, there's Bradford, York University's on the train all the way up there as well. So it's not just one stop, there's stops all the way up. So if you take a look at where the GO Train goes, basically Toronto is going to come out to Barrie here in a hurry. I could see it for sure.
Yeah, nice.
Everything's getting smaller and smaller, closer and closer. So one more thing I wanted to touch on is supply chain issues on the construction side. If people are starting to want to build a garden suite or do an addition, something that you have to keep an eye on right now is concrete. Concrete is giving us a huge headache. There is a shortage of lime, essentially. So if you go to the hardware store right now, you try and buy a couple bags of concrete, they're sold out everywhere. The concrete plants are capping people, our forms, footing guys and everything, about how many they can use per day. And it's just causing us a huge headache right now. So if you guys are thinking of doing any building development in the next little while, talk to your concrete guy. Make sure you book them in 6 months in advance, 3 months in advance, because it is very difficult to get them out. So just be aware of that. We just want to keep people abreast of what's going on. So
have you noticed like major increases from a cost perspective, or is that something that we should at least factor in at this point?
Cost hasn't been too bad. We've seen a bit of an increase, but the biggest thing is time. Time is money. If you're waiting 4, 6, 8, 3 months to get a concrete guy there, especially if you're not in the game, like we do quite a bit of work with these guys, so we're screaming pretty good to get our stuff done. But if you're just a one-off trying to do it yourself, like good luck in this marketplace.
Seriously,
you really got to know somebody, and it's causing really big headaches for a lot of people. A couple of guys are tackling their own stuff. Like, we just can't get them to show up. No one will even listen to us because they're all attending to people that are, they're big clients. You got to take care of them. So something else too is the elections are coming up. October 24th is the municipal election. So, be informed. Go check out your candidates for your municipal elections. All your council people, mayor people that are running, they'll have Facebooks, Instagram, websites. Be informed, make the right decisions, and just be aware that's coming up. So get out and vote and help make the good decisions.
I like it.
So these are the next couple slides here are about the in-person event that we're having. We're putting it on through RPI Education, which is an investment group that they do teachings as well. And we have in-person events, usually about every quarter. We're trying to do them now, and we add great value. It's belly-to-belly networking. So it's great for people to come out, connect in, especially with everything that's been going on in the marketplace in the last little while and the big shift. So here are all the details. Nick is going to be speaking at the event as well. It's Thursday, September 15th here in Barrie. I'll be speaking as well. Come meet us. Come say hi. We'll be navigating the shifting market, learn what to buy, where to buy, and how to finance it. Nick will be speaking for quite some time on that and what's going on in this crazy world. And just a little bit of plug about us. So I'm a realtor as well as the project management company, MCIS. We provide end-to-end project management for our clients in addition to the acquisition through the real estate side. We do everything from second suite conversions, triplex conversions, multifamily conversions, lot severances, infill developments, land assemblies, everything, and of course the garden suites as well. So if you need a one-stop shop to help find an opportunity, design it, build it, we can do all that for you. So give us a call and get plugged in with us. We also have a project management software that we have as well. This is a really cool program. It's right to your phone, an app, and we give you updates right onto your phone with pictures and pricing and all your floor plans, everything right on this app. It's a pretty cool little program that we use to keep people up to date.
Very cool.
We are Tarion registered, so we are registered builders in the eyes of the province of Ontario. We're fully registered, fully insured. We have builder's risk insurance as well as liability as well. So if anything ever happens, we're fully insured and registered builders, and not a lot of people do what we do can say that. So, all right, everybody, I'm proud to introduce Nick Lecuyer of Mortgage Wellness. He is the go-to mortgage guy in Simcoe County. He helps me with all our stuff and most of our clients as well. He does a great job, and I'll let him introduce himself a little bit more as well.
Nice. Yeah, thanks very much. Really appreciate it. So I'm the principal of Mortgage Wellness. We're the largest mortgage company in Simcoe County. We work with about 800 families every year. We've worked with about 5,000 families in Simcoe County. We have 5 community offices. We're typically niche based, so we do a lot of construction financing. We do a lot of private financing. We work with a lot with investors, and have had the pleasure of knowing Colby for, I'm going to say almost 10 years now. It's got to be, right? Colby's both a client, a business partner, a big supporter of our business, and also has just become a really good friend as well.
Awesome. I like to hear it. Good. And to be honest, for anybody that's watching, having a power team of people who know how to communicate with each other, I think is a very underrated thing, especially if you're a new investor or you're a new buyer. I think there's some people who are like, I don't want my agent and my broker to speak. I don't know, are they going to do some like weird industry thing, right? And you're not wrong to feel that way. But if you have, if you're working with an experienced professional and they have an existing relationship like you guys have, it's typically significantly to your benefit.
Oh yeah, absolutely. As soon as the lines of communication all open, and that actually includes communication to the lawyer as well. It even extends it through to the realtor, the lawyer, the mortgage broker, the appraiser, the insurance provider, like everybody being on the same page will absolutely increase the efficiency on the deal.
Yeah.
Open communication lines, like on great deals that we do with investors, and I'm, working with Colby, and we're working with our favorite lawyer, and the lender's really great, and that lender allows me to order the appraisal from my favorite appraiser. Often there's a group text just going around.
Yeah.
And it's like, hey guys, just left the property. Property looks amazing. We'll have the report by tomorrow. And then we screenshot that and we send it to the client, or the client's in the group. I mean, not only the efficiency of the deal, the success of the deal is almost guaranteed.
Mm-hmm.
All right. So let us know the 5 things that we need to know about mortgages today, Nick.
So this is really what we're going to be covering in the upcoming presentation. So I'm going to give you a high level view of it. Okay. So every month we try and bring the 5 things that are happening in the industry right now, just so that everybody really knows. I mean, what we don't want to do is spend time talking about what the minimum down payment is on $500,000 or how CMHC insurance applies to a mortgage. It's
right.
really, really, really the important stuff that we want to focus on. Stuff like this. Fixed rates have reached their highest level in 10 years, right? So there's 3 categories of buyers that we typically look at with this. So obviously we know first-time home buyers, those that are paying CMHC, get the best rates possible. And those that are putting 20% down, like selling and buying, they pay a little bit more. And then of course, those that are purchasing an investment property are sort of deemed as the highest risk among these 3 categories, and they pay the most. But what you'll see is that in all 3 categories, the interest rates are touching about 5%, right? So the rates in the 1s and the 2s are gone. Like they're gone, they're not coming back. And if we look at that historically, the 5-year discount rates that we're seeing right now in and around the 4.79 range are the highest that they have been in over 10 years. Now, what you won't see actually is the true effect of what's happening right now, because it's good news. And we know media doesn't report good news, right? So in January, interest rates were like 1.99%. They started to climb in February. And as they continued to climb, house prices were also increasing. And we all know interest rates and home prices don't typically travel in the same direction. For this short period of time, they were. Until most lenders issued about 30 to 40 interest rate increases over the course of, say, 8 months. But wait, about 2 weeks ago, we saw bond yields decrease for the first time in months. And that means that fixed interest rates are actually down by about 0.5% right now. Yeah. Nobody's talking about it, right? I mean, it's certainly not like mainstream media. So when you look at what it means for buyers, I mean, we were here in January. When interest rates went up by a full %, payments went up by about $250 a month. Also, what nobody talks about is the difference in the balance remaining at maturity, right? Like this is $250 a month. That's significant. Over the course of 5 years, it's like $12,000, $13,000. But you'll also owe $9,000 at the end of 5 years for every time the interest rate goes up by a full %. Mm-hmm. Right? But prime rate will continue to increase. We know that. Now, I'm not going to focus too much on this because we know that the next meeting is September 7th, right? And at the event, we're going to dig into what that really means for buyers. Stuff like a 1% increase on $100,000 is really only $1,000 a year, not a month, a year, right? Because we know also that prices have decreased. So, one of the things that I'm going to dig into is stuff like this, like, who wins? Like, if you bought for $750,000 in January and got a really great interest rate at 2%. And Colby bought the same house for $600,000 in July, but he got an interest rate of 5%. Who comes out ahead? I mean, we know that Colby pays more per month, but after 5 years, what does it really mean, right? So we'll analyze those kind of trends as well. And we know that with increased rates comes decreased affordability. So we'll go over that as well. On average, right now we're seeing about a 15% decrease in affordability. So we'll actually go through real live examples of how affordability has decreased. And then we'll dig right into where the opportunity is, because that's what most of these people come to this event to discover. So I put together a little scenario here just for our talk today. This is really interesting. I think you guys are going to find this just great. So let's say 2 different couples buy the same house on the same street. Okay. So same model, right? Let's say across the road from each other. And let's say you buy this house in January and you pay top dollar for it, you get a fabulous interest rate of 2%. And like I was mentioning earlier, Colby buys the same model on the same street in July. And he gets a fabulous deal on that house, but he pays an interest rate of 5%. So who comes out ahead after 5 years? Sort of leaves you wondering, right? So top dollar for the house, but low interest rate, or great deal on the house, higher interest rate. Who comes out ahead? So the math on this specific example would be, the first couple who buys for just under $1 million and puts 10% down have a monthly payment of $3,900 a month. Now that's at 2%, right? Now, after 5 years, that person will owe $777,000. Conversely, the couple who buys in July, they only paid $850, 15% reduction, right? Apples to apples comparison, we're going to say they put the same down payment as the other person. Their monthly payment is higher, almost $4,500 a month, but they only owe $684,000 after 5 years. So who comes out ahead? Well, the people that bought in July are paying almost $4,500 a month, whereas the people who bought in January are paying $4,000 a month. People in July pay almost $600 a month more, right? But the people that bought in July owe significantly less after 5 years. How much less? Like almost $100,000 less, because you can't make up that much in interest just over 5 years, right? Like they paid $150,000 less for the home. So after 5 years, Colby buying in like June or July, for example, owes $100,000 less. And it's $92,900. Even when we factor in the extra payments of the $34,000, the person that bought in July and paid more than double on the interest rate comes out $60K ahead. So those are the kind of like real life examples that we're going to go through in that seminar, right? We're going to show people that there's still opportunity in this market.
Yeah.
Lots, actually. It's not even a parallel comparison. I mean, you pay more than double the interest rate, you come out ahead, but it has to be on the right purchase. And we can show people that, there's reemerging trends. Colby and I were just chatting about this week, and we're like, wait, is single family back? Because in a community like Orillia, you can buy a single family home for under $500,000 that carries for $2,200 a month and rents for $2,600 a month.
Yeah.
And you're like, wait, that's like, I make $400 a month. I spent less than $500,000 on the home. It took less than $100,000 to get into with a 20% down payment. Like, is this the resurgence of the single family dwelling as a rental? Like, those are the kind of opportunities that we're going to be chatting about at this presentation.
Totally. You actually made, I think it was your first slide there. And I know to us being in the industry, it seems like a no-brainer, but I wanted just to ask you one question, because I think if somebody's either a new investor or a first-time buyer, they might be confused by this. And it was about the interest rate with an insured mortgage, which is putting down less than 20% versus a non-insured mortgage. And so most people would think, hey,
this
man,
is a great one.
I'm putting down 5%. Why? Hey, I'm putting down 20 and you're putting down 5 and you get a better rate than me. How does that make any sense? So for any viewers, can you explain that?
So I did almost the same presentation at a club I belong to. I'm a Rotarian. So I was at my Rotary meeting yesterday, and I did an update on just what's happening in the mortgage industry and that sort of thing. And I picked out 2 people in the audience, and one person was like, in the demographic of a first-time home buyer, let's say. And the other person was in the demographic of like enjoying their retirement years.
Sure. So
let's just say like, Emma, you're the first-time home buyer, and Colby, you're the retired person. So I was like, stand up for a second. So, so my beard's way wider than yours, though. Colby, So I stood them both up and I said, okay, so Emma wants to buy a home, and let's just say, it's $900,000, and she wants to put down $50,000. And Colby has a $900,000 home, but he only wants to borrow $50,000. So you're putting down $50,000, Colby's borrowing $50,000. Who gets the better interest rate? And everyone's like, Colby gets a better interest rate. Of course he does. Look at all the equity he has. Wrong. Okay. Colby will pay a higher interest rate than you will, and it's simply because you're going to pay mortgage default insurance. Now, it's most commonly known as CMHC. There's 3 insurers in Canada. Most commonly CMHC, Canada Mortgage Housing Corp. It's a crown corporation. It's owned by the government. It's an insurance company, and it's owned by the government. Somebody told me once that it's the second richest crown corporation, only second to the CRA. Because it's a government-owned insurance company, right?
I mean, yeah, that makes a lot of sense.
It makes a lot of sense, right? Yeah. So because the mortgage is insured against default, they get the better interest rate. They want to incent those buyers, right? So basically how it works, like in a nutshell, Colby buys a home, he puts 5% down. He defaults on the home, doesn't pay. The bank starts the power of sale process, sells the home. If there's a loss, they submit the claim to the insurance company.
Yep.
So just like any other kind of insurance, right? There's a loss, there's a claim, there's a pay.
Yep.
But because it's insured, lenders like, Colby doesn't pay and there's a loss, I'm covered.
100%.
Like CMHC is 100% covered.
Yep.
You know, the other two
so
are
it
90%.
makes sense.
Mm-hmm.
The lender is incentivized. Like, it makes more sense for them when you put down less than 20%, because they have cover our butts insurance at the end of the day. So even though they've technically given you more, or they've essentially lended you more money, and you're like, well, it doesn't make sense. You're giving me more money and
I'm putting less down.
Yeah.
In fact, like if you put 5% down, they're going to add back the insurance policy premium. It's added to the mortgage. So if you bought a $500,000 home and put 5% down, they're going to add back 4%.
Yeah. So it's like the
you only have
equivalent
1% in the deal. That's it, right?
Yeah. Brutal.
Yeah. And back in the day, like when I got in the business in 2007, 100% financing was a thing.
Yeah.
So you could put no money down. They added the insurance premium on top, which I think at the time was close to like 7% because of the risk, right? Mm-hmm. So you would end up being at 107% loan to value. But wait, you could take a variable rate. There was no stress test, and you could have a 40-year amortization.
40.
What happened?
every deal we did was 40-year amortization, you know?
Yeah.
And it like, I mean, if it was a duplex, no problem. We could use 100% of the rents. We could reduce expense. We could remove cap price. No property limits. Like I remember property limits when I got into the business weren't a thing, you know? Somebody would call and say I own 17 properties, and we're like, okay, let's go, you know? I want to buy the next one with 5% down. We're like, okay, give us the addresses of the properties you own. Totally different game, right?
Yeah,
but still but the insured business is still good. Like, you know, for those that can qualify with 5% down, like sure.
Yeah.
You know, why not?
Look, at the end of the day, ultimately what we've just said is times have changed. There's still opportunities. Yeah. It is everybody's own responsibility to figure out what the opportunities are, and you need to work with professionals that are doing this every single day, because you might be thinking, you started this, like how many people do you start having conversations with? They fall off the map, then they come back like 2 years later, right? So if you were looking pre-COVID and you fell off the map, and now you're like, I'm going to go back and use that same, or think about doing the same strategy.
Oh yeah.
Don't don't start there.
Yeah.
Start here with the conversation, and then figure out what opportunities are working now, because what you were looking for 3 years ago or 4 years ago, it might not work anymore at the end of the day.
And we do a lot of presentations for Realtor partners, for example, and I'm like, please stop, don't get in the car, don't spend your Sunday on a client that, for example, you were working with last year, they fell off the map.
Yeah.
And they called you and they're like, I just found the perfect one. Can you take me out to look at it? It's all changed. Yeah. Even if they were pre-approved in like February, it's all changed. They can't look at the same property. They won't get the same rates. They won't qualify for the same mortgage. Like, don't waste your Sunday.
Yeah.
Buyer and realtor, like, don't waste your Sunday, because it all needs to be pre-approved, but not even just on the numbers, on expectations, on price point, on like even the formula, Colby, like the strategy. Because like here we are, we just said like it might make sense for a first-time investor to buy a single-family home.
Yeah, it was like what we were doing with townhouses back in the day. You just pick up a townhouse, set it, and forget it, right?
Yeah.
There's no burr strategy or anything, mind you, but if it's simple and easy and that's what you want to do, it works as well for sure.
I mean, we have investors like Colby. You sent me a referral this week, and I had a Zoom call with them, and they're like, we just want to know what our buying power is. Well, they make great money. Like T4 income is awesome, but I said, when you're talking about investments like that, really your buying power is how much money do you have. Well, we identified they had $220,000. I'm like, great. That's 20% down on quick math, $1.1 million, for example. How many houses can you buy for $1.1 million? They're like, maybe two. I'm like, I agree, maybe two 550s, but it's not 3, it's not 4, it's not 5, it's 2, it's 1 or 2.
Yeah.
So let's get 2. What can we get for 550? Because we want to get 2. We want to spread it out.
Yeah.
What's 2 single family detached in Orillia? It's 2 single family detached in Midland, or it's 1 really great duplex in Barrie, for example.
Yep.
Like that's how you determine buying power in this market, right?
Yep.
And then it's handing it over to Colby to say, okay, buying power is 1.1 million. It's 2 of this, it's 1 of that. It's not 3 of anything. What do we want to do here? But that conversation in January to that conversation today,
very different.
Like to your point, totally different. Yeah,
absolutely. Yeah.
So if you're still watching, we're up minute 43 right now. If you're still watching, this was awesome. If you're watching this, you got to go to this event. Like, there's no question in my mind. If you just got this for free watching it on YouTube, then what are you going to get if you go to the actual thing, right? So if you're thinking about purchasing real estate or doing something in the next 12 months, when is the event again? Can you just remind everybody when it is?
September 15th.
September 15th. You guys got the rest of the summer to drink and have barbecues and do all that kind of stuff. But after Labor Day, it's time to get back to business. And September 15th, you can kind of get the ball rolling again with these guys.
Yeah, absolutely. Yeah, get back into the swing of things and then come learn about some real estate.
Awesome. And for any viewers, if they want to reach you, Colby, where can they reach you?
colbymarshall.ca. We have a lead capture website there, as well as all our details are on there. Okay. And then the link for the event will be in the comments as well for the YouTube part of it as well.
All right, perfect. And what about you, Nick?
Just mortgagewellness.ca. Check out mortgagewellness.ca. You'll find our 500 5-star Google reviews. You'll find me. You'll find the website. You'll find the locations.
Awesome. Any final parting words for the viewers?
Here's the thing, we know, I mentioned, interest rates and home prices don't travel in the same direction, right? So don't pay attention to the hype in the media about variable rates and prime rate. We know it's going to go up. It's their only mechanism to try and stifle inflation right now. Focusing on those fixed rates, they're decreasing right now, and so are home prices. So where's the opportunity, right?
Yeah.
There you go.
For me, I think, we talked about that window of 8 months where it's going to be a prime time to buy late this year, early next year, up to Q2 of next year before interest rates might come down a little bit was kind of my prediction earlier in this segment here. So, get plugged in, talk to Nick, talk to your mortgage broker, get plugged in here and, see what's going on mortgage wise and catch that window if you're looking to acquire another investment property or even your first one. Plug into us and we'll take care of you when we hope to see you at the event here in September.
Yeah. Awesome. Well, there you go, guys. If you are looking for anything in the Barrie region, get in contact with Colby, get in contact with Nick. Their contact details are in the description below. And as always, if you found any value in the video, give us a like and a subscribe. And we look forward to seeing you guys in the next one.
Thank you.
Thank you.